Have you ever wondered if whole life insurance is a financial trap or a golden opportunity? Well, in this video, I'm going to dive deep into the world of whole life insurance to debunk some of the common myths and reveal the real truth that financial gurus don't always share with you. If you're an entrepreneur, a real estate investor, or simply somebody looking to secure your financial future with confidence, then this video is the must-watch guide that you've been waiting for. I'll break down complex concepts into simple, actionable insights, empowering you to take control of your financial future. So if you're ready to transform your perspective and discover how whole life insurance can be a powerful tool in your financial arsenal, stick around. The truth might just surprise you. Hey, what's going on, Cashflow hackers? It's Chris with Life 180. This video, we are going through the myths of whole life insurance. My goal, my objective in this video is to bust those myths wide open, give you clarity, give you perspective, help you realize the truth about these things, and get you to think a little bit critically for yourself. I'm a big believer that the quality of our life is going to be directly dictated and correlated by the quality of the questions that we ask. So with that said, what I'm going to do now is ask the questions of these myths that are out there and why are they myths in the first place, and I'm going to break them down, and hopefully at the end of it, it's going to make sense to you. So myth number one, many people believe that whole life insurance is prohibitively expensive. I want to break this down on why people think this and what the truth behind it really is. First and foremost, before we go deep into it, we have to really do a cost versus benefit analysis, right? So while whole life insurance has higher premiums, right? Like there's no denying the fact that you will pay higher premiums for whole life insurance. It's important to look at the crucial consideration of what you're actually getting in return for those higher premiums. Whole life insurance provides lifetime coverage. It builds cash value over time that you're going to have access to. A lot of times you can have more cash value available inside of the policy within the first 4 to 5 years than you actually contributed to that policy, picking up more coverage, picking up more liquidity, being able to utilize that money for other things, and we're going to get into that. But this means that you might pay more upfront. You might be paying more in premium for your policy, but what you're actually getting in return, the benefits, the value are far greater than the cost. And I don't know about you, but where I come from, the people that are successful in my life, the mentors that I've had, have always told me, don't think about cost, think about value. We compare this with term life insurance, and term life insurance is cheaper. It's sold cheaper. The value proposition is all about a race to the bottom. It's what's the most coverage you can get for the least amount. I don't know about you, but nobody gets wealthy thinking like that. And sadly, that short-term mindset puts you in a position where you could be going up the creek without a paddle, because what happens is it gives you coverage for 10, 20, or 30 years. And then once that term ends, so does your coverage. Not to mention that that term insurance doesn't have living benefits, and that when your policy ends in 10, 20, and 30 years, while a lot of people will say you only need term insurance, you should buy term and invest the difference, they're not considering the other value that whole life insurance brings to the table after your term insurance would expire. It comes to the table in the form of access to the cash value as a volatility buffer for retirement income, for the living benefits in retirement, to control your medical directive, all these other things. At the end of the day, in that 10, 20, 30 year period when your term expires, or after that period of time, whole life insurance is going to keep protecting you for the rest of your life in so many ways. One of the things that I always tell people is that we have to think long term. Thinking too short term is why people get into too many problems. So with that said, I think it's important to look at the long-term financial advantages of whole life insurance. So when I think of whole life insurance, what I do is I think of it as a forced savings plan. Over time, the cash value is going to grow tax deferred. You can borrow against it if you need for things like real estate, business, private money lending, or just an emergency fund, right? The long-term financial advantages far outweigh the initial cost and the lack of liquidity, or maybe a compression of the liquidity and the premium that we're putting into it, making it, in my opinion, a wise investment. Even though it's not an investment, I would say it's a wise savings vehicle for those that can actually afford the premiums. But once again, I would say only put in to your whole life policy what you can afford to save, not invest. So that's myth number one. Let's get on to myth number two. Myth number two is that another misconception is that whole life insurance is merely a cash grab by the insurance companies. I want to explain and explore why this is in fact not the truth at all. First of all, we got to look at cash value accumulation. Whole life insurance policies accumulate the cash value, as I talked about in the last point, which grows over time. This cash value acts as an additional financial resource that you can tap into when you need it the most. We talked about real estate investing. It can be used for an emergency fund. It can be used for a volatility buffer. It can be used for a lot of different reasons. It's not just about the death benefit. It's about building your financial reservoir. It's about building your financial foundation of safety. When you build it, you have access to that cash value. You can access this cash value through policy loans or withdrawals. There's different times. It makes sense to use different strategies. Make sure you work with somebody that can coach you and work you through that process and understanding the positives and negatives to either decision you make. But what happens is access to these strategies through withdrawals or policy loans provides you with financial flexibility. It allows you to use the funds for various needs. Like I said, we can use it for emergencies. We can use it for education. We can use it for real estate investing, business opportunities, these sorts of things. One of the great things about policy loans is they're particularly advantageous because of the fact that they're tax-free and they don't require credit checks. So you basically have your own personal line of credit, never interrupting the compounded growth of your own money. Plus, a key component behind this is not only are there no credit checks, not only is this money protected against lawsuits in most states, but the interest that you actually pay, instead of paying the banks, you're going to pay the insurance company. And when you pay the insurance company, because of the fact that they give you a loan guaranteed by the cash value and the death benefit in your policy, they never interrupted the growth of your own policy. So if you're paying the insurance company 5% and you're earning 5%, it's not a loss for you. Your actual cost of capital and the control of that cost of capital, and especially in higher interest rate environments, is an extremely powerful benefit that's really hard to see on a spreadsheet. It's one of the most wonderful things that I love about this stuff. So that's myth number 2. Let's go to myth number 3. I want to debunk this myth really fast. Living benefits with whole life insurance are a massive, massive value. This is something that most term insurance policies don't cover. In fact, even though some term insurance policies can get living benefits attached to them, the problem is they're only as good, those living benefits are only as good as the term policy, and meaning if the term expires in 10 or 20 years, the benefits expire in 10 to 20 years, right? So the reality is you're most likely going to need your living benefits, like long-term care alternatives, stuff of that nature, while you're in retirement, when you're likely not going to have your term insurance if you follow traditional financial planning thought. On top of the living benefits and the accelerated benefit riders, you're going to have that cash value that we've been talking about the entire time is going to be a source of funds for your retirement. You can utilize it to pay off debts. You can even use it to start a business. At the end of the day, I love talking about whole life insurance as a bond alternative. By incorporating whole life insurance into your financial strategy, you gain a guaranteed payout with predictable growth. By incorporating whole life insurance into your financial strategy, you gain a guaranteed payout and predictable growth in your cash value. This helps create a balanced financial plan when you integrate it as part of a greater financial strategy that you can adapt to various stages and needs in your life. I can give you countless real-life examples of people that have used their cash value to fund their children's education, to invest in real estate, to launch businesses, to utilize it. I mean, my own personal stories. My father-in-law was diagnosed with stage 4 pancreatic cancer when he was 73 years old. They gave him 3 months to live. And I can tell you, because we were able to accelerate the death benefit in one of his life insurance policies and pay for alternative medical treatments with stage 4 pancreatic cancer, which, if you know anything about that, you know it's basically the killer of killers of cancer. He's still alive 4 years later, right? To me, that it's one of the unsung heroes of life insurance, is that you actually use it while you're alive, not just when you die, right? That's a big thing. So that's myth number 3. Some people just believe that whole life insurance is a poor investment, and I need to set the record straight against Dave Ramsey, Suze, Orman, A.L. Williams, and all these people that believe in the buy term and invest a different strategy, right? I think it's not fair, and I think it's unrealistic to compare whole life insurance to other high-risk investment vehicles. Instead, what we should do is we should look at whole life insurance as it is, as a stable, low-risk component of your financial portfolio that offers guaranteed returns that are going to complement other investments that you make, like stocks and real estate and your business. Once again, I'll say it, it is the financial foundation of your personal financial world. That foundation should be the stability and the security, much like the foundation of a pyramid, much like the foundation of your house. This is the important thing. When you have your whole life insurance policy, of course, it's not going to get the same returns. It doesn't have the same risk, but what it does is it gives you guaranteed returns through participating in dividends with these companies. That's one of the standout features of a whole life insurance policy, is the fact that it gives you guaranteed returns on the cash value. On top of the guarantees, you're also going to get a dividend payment. Now, while dividends are not guaranteed, we only work with companies that have been doing this 110 or more years, and they've paid a dividend every single year consecutively for 110 years. In doing this, you're basically participating in the success of a company, much like like an owner of the shares of stocks of a privately held or a publicly held company. Do it that way. When you get these dividends, you can utilize it to buy paid up additions. It's going to increase your policy value even more. It's going to give you more liquidity, more cash value, more living benefits, all of the things. It is the thing that stacks these dividends. It is the element of the policy that injects hyperspeed growth into the cash value growth. And when we compare this guaranteed asset to any other guaranteed asset in the world of personal finance, nothing can hold a candle from a long-term perspective to what whole life insurance offers. Now, it also offers tax advantages. It's one of the beautiful things. While it's not a great investment, it's a great savings vehicle. Whole life insurance also offers tax advantages. The cash value is going to grow tax deferred. The death benefit is typically tax-free, and you have access to the money tax-free through loans and withdrawals up to cost basis without having to pay taxes. So once again, depending on how you utilize it, you got to be, make sure you're utilizing it as part of a bigger strategy and that you understand how to leverage the cash value in different scenarios. But when you do, it's a wildly powerful tool. So that's myth number 4. Many people believe whole life insurance is rigid. It doesn't adapt to changing needs. It's not flexible. And the reality is this is far from the truth. There are a lot of different ways that you can customize your whole life insurance policy. You can put different riders on the policy. You could do different blends of the policy. You can choose from different premium payment schedules, and you can add different riders. You can enhance coverages. There's a lot of different things that you can do. And another element is you could choose different companies that allow you to have different levels of flexibility in the way that you pay your premiums. Now, I think this rigidity, even though it's sold as a horrible thing, it's not as bad as they say. I could actually show you how whole life insurance is actually almost as flexible as an IUL, but you don't pick up any of the downsides and the lack of guarantees that you have to kind of succumb to when you're going with an IUL. The other element of whole life insurance when we're comparing it to investments is that, once again, I said it before, we got to look at it from a value perspective, and I'm going to repeat myself a little bit because I think it warrants some repeating. The riders, like accelerated death benefit riders, potential long-term care riders, disability waivers to your policy, it all provides additional protection and flexibility. Once again, it's not about the cost, it's about the value. It's about how does this asset function as a foundational component to your finances that enables all of your other assets to perform better. Dr. Wade Pfau, he's a specialist in retirement income planning. He did a study and he said that by having money in a whole life insurance policy, it's a replacement of the traditional 60-40 bond portfolio, retirement portfolio with the 40% being bonds. Now he's saying have 40% in whole life insurance because over a 30-year period, it's going to outperform bonds, and it's putting you in a situation where you get these other benefits that are, and it's going to enable your investments to perform 25 to 50% better than they would have without it. Once again, that's a benefit and a value that you can't calculate on a spreadsheet. The other thing about whole life insurance that I love is that it can be adjusted as your life circumstances change. I always say whole life insurance is the only product I know that can adapt and adjust with you at every phase in your life. Now, if something happens to you, you can increase your coverages, potentially if you have the right riders attached to it. You can reduce coverages, you can adjust your premium payments if you need to. You can even convert the policy into a different type of insurance if needed through the utilization of a 1035 exchange. So hopefully that kind of squashes the myth that life insurance is a bad investment. It's not an investment at all. I can't tell you how many times I've gotten so many comments being like, oh, this only works for the wealthy. Yet out of the same side of their mouth, they're talking, or the other side of their mouth, they're talking about the fact that wealthy people only need this for tax advantages. And then they say, well, I only need whole life insurance while my kids are here and I'm trying to protect my family and all this stuff. Well, the wealthy people don't need insurance for the bare minimum thought. They're buying insurance because of the fact that it's the most advantageous way to pass wealth on to the next generation. And if you could utilize the cash value along the way to make your other investments and businesses better while picking up that transfer of wealth benefit, that's what it's all about. Now, a lot of people misrepresent whole life insurance and they say it's the secret tool the wealthy use to get wealthy. They don't use it to get wealthy. They use it to help make more money, and it creates a system in which they make more money. But really what they do is it's the backstop of their wealth. A lot of people make money, but a lot of people lose money at the end. A lot of fortunes have been made, a lot of fortunes have been lost. What whole life insurance does is it provides a backstop to make sure that once you make it, you keep it. Once you make it, you're able to pass it on to the next generation. But on top of that, it's actually quite affordable. You can start at different levels. You don't need to be a millionaire. You don't need to be spending, 6 figures in premium or even 5 figures of premium every single year. Whole life insurance is going to be accessible to every individual at every income level. Now, it may not be the right time for you to get a whole life insurance policy right now. A lot of times I'm going to suggest that you clean up your debt, you do a lot of things, you get a convertible term policy, and then once you have your debt cleaned up, then you convert it to a participating mutually held whole life insurance policy. If you do this with careful budgeting and planning, middle-class families are also going to be able to benefit from the security and the advantages that whole life insurance offer, utilizing it as their emergency fund, as an opportunity fund, the things that we're talking about. When we do this, it's going to provide a financial safety net that most middle income families in the United States don't have, unfortunately. And it's going to protect them for unexpected expenses. It's going to protect them for their future and ensure that they have financial stability throughout their entire life. Once again, I could give you countless examples of people that we've worked with that come from different financial backgrounds that have successfully leveraged whole life insurance to secure their financial future in different ways. People that have benefited in different ways from having a whole life insurance policy, whether it's the fact that they had the life insurance and it was there when they needed it, the fact that they had the living benefits and it was there when they needed it, the fact that they had access to the cash value to buy real estate and find an opportunity that they could only touch because they had liquidity and they had access to capital when they needed it the most quickly, right? The reality is it's a versatile tool that anyone looking to build a solid financial foundation needs to look seriously at. All right, so let's consolidate these key benefits that we've been talking about for whole life insurance. First and foremost, I look at it as financial security and peace of mind. It's going to provide lifelong coverage, ensuring that your family is financially protected no matter what happens to you. And it's going to offer you peace of mind knowing that you have guaranteed payout. One of the things I always talk to is buying your net worth and building your cash flow. And what that talks about is that we can never buy too much insurance above and beyond what we're capable of creating on our own. Insurance companies won't do it. So we have the ability to buy a future desired result. The peace of mind that you can have when you do that allows you to gamify your life. It de-stresses your life because you know the result that you're going to actually accomplish in your life is going to be completed. That's what you're after. And so when you do that, it brings this peace of mind. I believe it gives and provides you an opportunity to live a healthier, lighter lifestyle, and I don't think you can put a value on that. Obviously, at some point in time, we're going to get to the legacy planning and the wealth transfer stage of life. We never know when our time's going to be up. It could be tomorrow. Hopefully, it's a long time from now for you. But the death benefit from your policy can be used to transfer your wealth to your heirs. It can be used to fund a trust. You can support charitable causes. There's a lot of powerful ways that you can utilize it as a tool for legacy planning, and how you want your legacy to be planned and what you want, the next generation and what you want your stamp on the world to be is up to you. But once again, I know no other more powerful way to create that than utilizing a whole life insurance policy. The other thing about whole life insurance is it protects you against market volatility. I talked about it as a retirement income asset. Unlike other investments that fluctuate with the market, whole life insurance offers stable, predictable growth, and it's going to help your other assets perform better because we're going to use it as a volatility buffer, making it so you don't have to tap into those negatively performing assets in retirement. I've talked about it a bunch right now, but on top of that, I love whole life insurance for entrepreneurs, for investors, for real estate investors. And when we look at it, it's not just for individuals, but in fact, entrepreneurs and investors utilizing this as a financial foundation for your investment strategy, almost as a filter in how you make your decisions on the investments that you make. I'm a big believer in using the phrase, what's the upside, what's the downside, can I live with the downside? By utilizing a whole life insurance as a savings mechanism and building your foundation, it's going to put you into a system, a financial system that will create the discipline and the rules that you can never overextend yourself and you can grow strategically over time. That goes with real estate, that goes with business, that goes with any other kind of risky investment that you might want to do, whether it's crypto or private money lending or anything of that nature. The great part about whole life insurance, when you really break it down, is what it is life insurance are designed to give you the best possible return with the least possible risk. So we're balancing risk with guaranteed growth. And when we look at this as a financial foundation of our life, as part of a greater diversified portfolio, once again, I'm telling you, there's nothing that can compete with it. So the question is, how do you choose the right whole life policy for you? Well, choosing the right whole life policy, first of all, is one of the most crucial components of this. Unfortunately, the industry's got a bad rap because there's a lot of people that talk about a lot of things and don't really execute the way that you need to. So there's a couple things that you need to consider. First, consider your financial goals. Stephen Covey always said we got to start with the end in mind and reverse engineer a plan to get there. I always say people fail with their money because their money is not in alignment with their values and beliefs. What does that mean to you? What are your financial goals? What are your lifetime goals? What's the impact goal that you have? What's your budget? What are the specific features that you need in a policy to do for you? Like I always tell every life insurance agent that I coach, stop thinking like an agent, think like an entrepreneur. Think about what problems you're trying to help your clients solve and then reverse engineer how to design a policy to help solve those problems, and you can actually do that. Make sure your policy aligns with your long-term financial strategy. Now, whether you work with me, whether you work with another agent, the key is to find a good agent that's in alignment with your values and beliefs, that shares those, right? Make sure you research the company, research the agent that you're looking to work with, make sure that this investment, and that they understand your values and beliefs, they understand your goals, and make sure that you understand the product, that you understand, or that you believe and you feel like they've taken the time, the due diligence, and that you've grilled them enough and asked them the right questions to get them to understand what you're trying to accomplish, to actually create a policy and not just give you some whitewash policy. The policy has to be designed to meet your goals, and you need to have the confidence that they can do that for you. So when you're consulting with your agent, you want to look at a couple things in the policy. They're obviously going to show you an illustration at some point in time. Hopefully they don't use the illustration to sell you just on the cash value and all that stuff, but you do want to look at it. You want to look at the cash value growth. You want to ask questions about the dividends, the fees, the front load fees, the cost of insurance, the implications of doing different things like premium offsets and reduced paid ups and the different riders that you can put on there. Are they really what you're looking for? Make sure that you fully understand all the terms, all the benefits, all the challenges. Now, if you're watching this, we're talking about whole life, but if you looked into IUL, make sure you understand all the moving parts and all the levers that the IUL companies can change that would be to the dismay of your product and to the benefit of them. It's one of the reasons I love whole life insurance so much, is because contractually, they're not allowed to do that. At the end of the day, if you're here and you're watching this, hopefully still you're watching this, that it's encouraging to you and that you're doing a deeper dive and you're learning more and you're feeling better about this journey, and hopefully I've kind of dealt with some of the skepticism that you have, because it's natural to be skeptical. I really encourage people to come at me with a lot of skepticism because there's so much misinformation out there. The internet is full of misrepresentation about whole life insurance, IUL, all these different things. That's coming from me, who I'm one of the greatest believers of this stuff in the entire world, yet I'm gonna tell you it's one of the most misrepresented products out there as well. So you gotta be really careful. That's what I was saying a minute ago. You gotta be really, really careful about who you work with. You gotta have realistic expectations. One of the things I always tell people is that you gotta have a long-term view. This is not a get-rich-quick scheme. You also have to have realistic expectations. One of the things I always tell people is you gotta have a long-term view. Whole life insurance is not a get-rich-quick scheme. It's just not. It's a long-term financial strategy that's gonna require patience and commitment from you to execute. And you have to look at the short-term costs versus the long-term benefits and see if that trade-off is worth it for you. To do that, you got to look beyond the premiums and consider the policy's overall contribution to the financial security and growth of your overall portfolio, of your goals, of your objectives in life. And at the end of the day, when I look at this, when I think about how this has impacted my life, how I've been able to utilize these strategies in my life to be where I am now, down in my studio in the Dominican Republic, at my hotel that we've been able to create and acquire only because we had access to money, because of things that I'm teaching you right now, right? I've got father-in-law who's alive because of this specifically. I've got clients that have been able to use money in their policy to open businesses in Mexico that have had access to capital when banks wouldn't lend them money, and so they were able to tap into opportunity that most people only dreamed they could. This is the stuff that I see all the time. So hopefully this video has given you a lot more confidence, a lot more clarity, a lot more understanding about how you could possibly leverage whole life insurance in your life. If you have any questions about anything I've talked about and you want a deeper dive, comment in the comment section below. Be specific, because if you have specific questions, I will create videos to answer those specific questions for you. When I do, I'll actually link that video in the comment back to you. If you haven't already, make sure you subscribe and hit the bell. That way you're notified every time I launch a new video. Hopefully you found value in this. I really put a lot of time and heart and energy into creating these. You subscribing, you sharing, you liking these videos is the best way that you can support the channel. I really, really honor and take the responsibility of sharing this content with a lot of responsibility. I really, really do. So hopefully you found value in it. Till next video, have a blessed, inspirational day. We'll talk soon.